Like everyone needs a light in the end of the tunnel, right? And when you don't have it, it's really depressing.
Well, I became this consumed workaholic where I had no balance in my life. Because it's no joke getting the deal over the finish line. There's a lot of moving parts and all this sort of stuff. At the end of the day, it's not necessarily highest price that they're looking for. They're looking for the strength of your team. And are you and your team going to be able to get this thing over the finish line?
Hello everyone and welcome back to The Path of Progress. I'm your host Alex Kononov, and today's guest is someone I've been really looking forward to having on, Hitomi Yasuda. With over 25 years of international business experience, she spent the past 6 years mastering the underwriting side of real estate syndications. She's personally underwritten over 1,500 multifamily and commercial deals across 10 states, and she is a co-founder of Underwrite to Win, a technical underwriting mentorship platform helping others build confidence and clarity with numbers. Hitomi, welcome to the show.
Thank you so much. Excited to be here.
Great to have you here. Honestly, this conversation is long overdue. You have really impressive diverse background: international sales, product management, merchandise planning. What first drew you into real estate investing?
Basically, the career that I had, it came at a cost. You know, lots of long hours, lots of high stress, and a lot of anxiety too, because I got trapped into that situation where I only had one source of income. Even if it was, a decent income, that was the only source of income that I had. And I was basically trading time for money. So I just became like this consumed workaholic kind of situation where I had no balance in my life. So the way I found real estate was basically I hit rock bottom, about 8 years ago. Mentally, physically, I was burnt out, emotionally, spiritually, right? Everything about my life was just out of balance. And so I knew it was not sustainable. It was really kind of just taking a toll on me. And so I needed to kind of find some alternatives, a different life.
I feel like everyone needs a light in the end of the tunnel, right? And when you don't have it, it's really depressing. So I'm glad you found real estate, but tell me, how exactly did you come out about real estate? Where did you hear about it? Did you have anyone in your immediate circle doing real estate?
I mean, my parents had like a little duplex when I was growing up, different friends, house hack. I was even house hacking at one point too, a long time ago, but I didn't really understand that was a kind of real estate thing. But basically, for me, right, I just knew that I needed to change how I was living my life, how I was actually earning money, because that was pretty much the big source of stress for me. If we're all worrying about money, right, it just creates a lot of stress in all avenues of our life. So when I became like super depressed and stuff like that, I had to take a look around me, like what other very successful people were doing. And one of the big things was they were not trading time for money. They were able to create multiple streams of income. Okay. And then from that, there was that connection with real estate, right? There's many different roads to financial freedom, but real estate is one that I kept hearing over and over, and it's one that I was interested in learning more about. So I decided, wow, I got to learn this real estate game. And from that, I explored the different avenues, and multifamily in particular, multifamily investing, like large apartments, is what drew my attention and I felt the most excited about for me.
It's very interesting. A lot of people usually start with flipping or some small multifamily, FHA or some other ones. You just went right to the target. I actually admire that. He has a lot of stamina to go through this process and to actually be excited about it. So how did you go about multifamily in the beginning? It's such a big difference when you're not in real estate and you jumping into real estate and dealing with large numbers like that. So what was your process about?
So again, I was listening to and observing a lot of the titans in the industry, the people that were very successful. And I was listening to a lot of their podcasts about how they got started and why they chose, for example, multifamily, right? Virtually all of them said if they could start all over again, they would have started in multifamily versus single family homes, and all the pros and cons with regards to scaling, self-managing versus hiring a third-party management company, and risk and stuff like that, right? Because all of this, that what we're doing, it all involves risk. But overall, right, listening to these very, very successful people who already created tremendous folio, the resounding message from many of them were, if I could do it all over, I'd start with multifamily. So that's why I'm like, okay, these people know what they're doing. I'm going to check out multifamily. And that's
just
the
follow
path.
the lead.
Exactly. Like, why recreate the wheel, right? Why recreate the wheel of what's working for many, many people?
Okay, fair enough. So what was your first step? Okay, you hear about multifamily. So how did you go about underwriting or looking for the next deal or talking to other people?
Well, obviously the first step is you have to learn how to do this, right? And at the end of the day, what we're doing is we're buying a business, right? We're buying a business. And so from that, I had to understand income coming in and expenses going out. So the first thing I did was I invested in myself, right? Through various coaching programs and mentors, how to actually analyze this business, the seller's financials and things like that. And then by working with people with experience, right? Understanding how to create that roadmap, the business plan of first analyzing and deciding that, yes, this is a good property to buy, but then coming up with that vision. What do we intend to do with it over the next however many years? And then what is the logical exit point? Stuff like that. So for me, the first step was just getting educated, right? And then practicing. And again, I cannot emphasize enough having a mentor, right, who can actually guide you. Because I was someone all my life, even going through school, I've always had very strong work ethic, very strong work ethic. But if your efforts are misguided and you're focused on the wrong stuff, right, you end up just wasting a bunch of time on things that don't help move the needle. So that's where working with a mentor was tremendous, because they were able to kind of help, right, keep me focused and efficient.
It's very interesting. Everyone chooses a different path, right? And education can be different. One could be focused on raising capital, another one can be focused on looking for a deal. You chose to drill into the numbers, and I think it's one of the important cornerstones, right? You can have a deal if you don't know the math, if you don't know underwriting process. Why did you choose underwriting for your specific needs? Did it correlate with your previous expertise and skills that you acquired while you were managing business and doing business for 25 years?
Well, I mean, like I said, right, what are we doing? We're buying a business. So from that, you need a roadmap. So even in my corporate companies, right, all the companies, they have a quarterly plan, a yearly plan. You have to have a target to know what you're trying to achieve. So for me, it was just a natural progression that, okay, I used to do this in the fashion industry, jeans and sweaters. Now we're doing it with apartments. We still have to have a plan. So for me, I believe underwriting is the backbone of anything and everything that we're doing. Capital raising is important too, but without a deal and without a plan, you can go out of business in 6 months, and then we're all going to be sunk, right? So underwriting is the backbone. That is what steers the business over the next however many years, right? It's absolutely critical to everything that we're doing. So because of that, it was something that I felt was very important, that I really understood.
I like it. So you had the skills in the past, you applied it just in a different direction. And it's really important to our listeners. If you're in business and doing something else, it's not that hard to pivot in real estate if you just focus and determined. If you're good at what you're doing, you just apply the same skills as a business skills into real estate and treat it as a business, right? And so how did you learn how to underwrite? You said you invested a lot of money in educational and mentorship programs, but you won't really learn until you do it by yourself many times. So how many deals did you underwrite before you actually bought your own apartment complex?
Probably over 100.
Wow.
Yeah, a lot of it, because I had to understand how to assess risk. That's kind of what it all boils down to at the end of the day, right? What are we doing is we're trying to find the highest probability of success on any of these projects that we choose. And so one of the biggest things, right, was I first had to get very clear on a buy box. What is it I want to buy and where, right? Because otherwise you get into that trap of looking at anything and everything, anywhere and everywhere. You get shiny object syndrome, and you start just wasting time hopping around and looking at this and then changing asset class and all that stuff. And so that was something that I had to first learn at the beginning, was to get very laser focused, so that I could be very strategic on what I was looking for, but also to understand the nuances as it pertained to cost, because every market is very different. Cost is different. Building relationships, right? Because this business is a team sport. You cannot do this successfully by yourself, and I wouldn't want to do it by myself. So by understanding the market, understanding what is my buy box, what it is that I want to do, from there you can then develop the critical relationships with the brokers, the local property management companies, understanding costs, right? And you have relationships with your lenders, your insurance, all of those things. So that's kind of how I got started, was just really getting focused.
So you found the markets that is good for you, that you would like to focus in, and you put a target on it. And now you're looking at any deals that come your way, you're underwriting. So it took you 100 deals to underwrite before you found the one actually that fit your buy box. Walk us through the process. How did you target a specific market? I'm guilty of the same sin, and I'm looking everywhere, and I'm still trying to find the proper market for myself. So what is your advice for people who's trying to understand where to land as a primary market? What were your processes?
So this is where you do have to do a little bit of research with some of the economic reports, right? You want to look at where population is growing. You want to look at landlord-friendly states. That could make a huge difference on just how you're going to operate the property. It could also impact your property tax, stuff like that. But really, really important, I believe, was getting to know multiple sponsors. These are very experienced investors who can help guarantee your loan, but will also act as your mentor. They'll become your business partner. And interviewing them in terms of what markets have been very successful and which markets to stay away from. There's a lot of concern about investing along the coast and what's happening with insurance, right? With all this Mother Nature, hurricanes and tornadoes and all kinds of crazy things devastating areas. And that leads to a lot of risk. So for me, it was a combination of the statistics. All of my decisions are data driven. It's not like, oh, I kind of like that because it feels right. I don't go by that. I go by what does the data tell me? So looking at statistics about population, about crime, economy, what major employers are there, and then leveraging the wisdom and the knowledge and the experience of sponsors where they have a track record. They've had good things happen, they've had bad things happen, right? So how do they interpret risk and learning from them and kind of going where all the successful investors are going.
Let's talk about specific numbers. Do you have any specific number for minimum household income that you look in the area? You won't go to that area if it's less than 40, 50,000 minimum household income. Do you have any of those?
No, because it's market driven. It's market specific. I mean, live in, for example, Jackson Hole, Wyoming, one of the highest per capita incomes in the whole United States. It's going to be very, very different to Iowa. So it has to be market specific and what you're trying to accomplish. The United States is gigantic. You can't just take that one average, right? There's no rule of thumb. I mean, I think that's a big thing that new people get all messed up is they use rule of thumb, averages, and try to apply that across everything as if it's all the same for everywhere. And you can't do that, So it has to be very much market specific. It also has to be what asset type you want. Are you going after A-class asset types, the ones that were recently built, right? So it's catered towards, higher income, higher area, right? It's also class of the area versus a B, C class asset, a little bit older, right? Rents are going to be a little bit lower. The neighborhood, all of those things are going to impact your tenant profile and what's appropriate for this particular deal that you're going after. So you cannot use averages and rule of thumb like that because it's really, really dependent on the market, right? And the product, the type of product that you're going after.
Really interesting. Okay, so let's reverse a little bit. I know you started your underwriting journey by helping others first. I know you mentioned this before. Can you dive deeper into it? I mean, I think this was one of the crucial things, how you got validated your underwriting rules and your own internal guidelines. Can you share with us, what did you do to get the skill?
So again, luckily I came from that sort of financial background, right, where I was doing a lot of underwriting in my corporate job. But what really changed everything for me, right, because I understood how underwriting is the backbone of anything that we do, right, because it's the roadmap. What helped me was very, very early on, I was very blessed to be taken under the wing of a mentor sponsor of mine. And they said, look, I believe in you. I know that you're a smart lady, but you just need some guidance here. I have a couple of really large deals that I need underwritten. How about this? Why don't you underwrite them for me? Okay, so I can test you. I'm not going to pay you and you're not going to be part of the GP team or anything like that. But what I will do for you in exchange is I'll give you feedback. And I was just like, done. Oh my God, this is what I was looking for. I wanted someone to rip it apart. I wanted someone to show me all the major mistakes and omissions, things I forgot about, right? To really kind of help me with that feedback. And I started underwriting with them for the next year, multiple different deals, and seeing where I forgot something or whatever. And that's what made my underwriting much, much stronger, was that direct feedback from a very experienced operator. Because underwriting, what I've learned is it's not black and white. There's an art and a science to underwriting. The science is the math, right? The formulas. It is what it is, right? The math. Income minus expenses is net operating income. But the art is all the different ideas of what you want to incorporate in your business plan as an operator. How much you want to raise rent? Do you want to offer reserve parking? How much do you want to charge for laundry income? Do you want to put in new landscaping, put in a dog park? All those different things. Each deal is different. Does that mean that my underwriting is better than yours or your ideas is better than mine? No. At the end of the day, it's about looking at the overall business plan and what has the highest probability of success based on all these ideas, right? It's kind of like the way I described it is like chocolate chip cookies, right? There's thousands of recipes for the best chocolate chip cookie out there. Is one better than the other? Who could say? But at the end of the day, it's about, for this instance, the different business plans, right? The different ideas, that roadmaps that people come up with. You can't really say because nobody has a crystal ball, right? Like how it's all going to pan out. It's more about taking a step back and looking which one of these has the highest probability of success, that they've really thought out time, cost, ability to actually execute, all those kinds of things.
And risk appetite and reserves, I think it's also important. I feel like for people with a lot of multifamily properties and a big portfolio, I think they can stomach different criteria that people who just the beginning, because they need a little bigger cushion, they need a little bigger rewards for their investors because it's more risk averse kind of thing. In your experience underwriting so many properties for different operators and learning from them, was there any difference in their approach? Is there, everyone has a unique vision on, hey, no, you can rule of thumb this, or we're gonna add different amenities, and the other person preferred different amenities. What did you see the common pattern there?
I think a lot of it, like I said, is about risk tolerance. So I've worked with operators who have like a very strong construction background. So for those individuals, they weren't so afraid of going after a much older properties like in the 1960s and 1970s. Because they said that, I have that experience of doing what you call a much heavier lift, much more intensive rehab renovation project because of my construction background. So the fact that it's older, I'm okay with it. I have other operators and sponsors who are like, oh no, if it's older than 1980s, I'm not interested. Again, because they don't want to deal with that sort of risk and risk reward type benefit. So a lot of it has to do with the risk tolerance and the experience of the key principal operator and whether they think, it's something worth pursuing or not. So I get a lot of guidance and feedback, and then it's a collaborative effort to fine tune the business plan.
Perfect. Can you share the first deals that you got in multifamily space?
Some of the first ones were during COVID. Like, I'm definitely not what you would call an overnight success by any means. It took me a while to kind of get going on this. There was a lot of tears. There was a lot of disappointments. There was a lot of rejections on letters of intent, LOIs, right? And so when something first kind of actually, the fish bit the hook, right, was back in 2020, right, the COVID years. And I got under contract on 2 deals, and then they both fell apart for various reasons. The first one was because got it under contract with the seller, and then COVID happened, right? The whole nation shut down. We were shocked. And for the seller, they had plans to take that money and then go into their next project. When everything kind of went sideways, right, the seller's like, look, let's have a gentleman's agreement and let's terminate the contract. Please don't sue me for non-performance. I will not sue you. I'll give your earnest money deposit back. But right, with COVID, everything's kind of falling apart. So that kind of happened. And then the second one was a seller, and this is something I learned, right, about being naive. Just because you feel the seller sounds nice, seems like a nice person, or the broker seems nice, you've got to do your due diligence. You really have to check. At the end of the day, it's buyer beware. And in that instance, we had a seller that misrepresented the property grossly. And we asked questions, but I think we didn't ask hard enough. And so as a result, that one we had to actually terminate and pull out of the deal once we discovered certain things, So it kind of had a lot of false starts, But then shortly thereafter, different deals got into them with partnerships and stuff like that. So just never quit.
Never quit. So to date, you've underwritten like what, 1,500 deals, or even more?
Probably
When a new,
more.
so when a deal, new opportunity comes to your desk, what is your first step? What are you looking at first?
It's about assessing risk. Brokers are always saying, oh my God, this is the next best thing since sliced bread and stuff like that, right? Because a broker wants to sell the property. For us, we're going to look at, I'm always looking at it from the investor's perspective because we syndicate everything. So one of the first things I look at is how can I protect my investors? How are my investors are going to be interested in something like this? And so I always kind of keep them in mind and the exit in mind as I'm looking. So one of the first things I do before wasting time is just look at the market. Look at the crime. Where is the property located? A property that the broker is saying is doing fantastic, but if it's in a really, really rougher neighborhood, it leads to a lot of risk, right? The tenant pool that you're going to be pulling from, the customers, so on and so forth. So I look at that. I then look at the trending. How is that market growing in terms of rent growth ability, right? The strength of that market. I look at median household income. What are the potential customers, tenants in that area able to pay? I look at market vacancy, the overall area, what does it look like in terms of the foot traffic and keeping the apartment full, things like that. So I do a lot of that kind of stuff before even wasting time underwriting the deal, only to find out afterwards, like, oh my gosh, we should have never bought this thing in the first place. So screening deals and being able to make a decision, yes or no, quickly is critical to this. Otherwise, you just end up wasting a lot of time.
Even you go before going to the numbers, you underwrite the area basically. And where
Yeah.
location, where it's located, understanding who is the tenant pool, what kind of crime is there, and what's going on. I love it. So, okay, step one done. I know you're known for your conservative underwriting modeling. So what does it mean in your approach? How does it show up in the numbers?
Conservative underwriting means like allowing yourself the highest probability of success. And because you could manipulate the numbers, so on paper, the business plan looks amazing. But the real critical question is, can you actually achieve that, right? So we do a lot of stress testing of the deal, right? Really understanding, based on this business plan of how much we think we can grow rents and revenue and, vacancy and all this kind of stuff, right? We'll do stress tests like, well, what if things didn't really go according to plan? What's our break-even ratio? How low can occupancy drop before we start bleeding out? What happens if, we run out of money, like not having enough operating reserves? So kind of looking at that as sort of stress testing the deal, what if we couldn't get the rents that we're projecting? What if rents are only half that? What is that overall going to do to our cash flow and things like that? So we're constantly looking at things that could impact cash flow and how bad can it get before we're really in trouble, to really kind of understanding the wiggle room that we have. So that's what conservative underwriting means, is setting goals for yourself that doesn't require you to be like the Olympic athlete champion where the stars, the moon, and everything align for you to be able to hit your targets, right? We want to be able to underwrite it so that, in case we don't hit it in 5 years, we have that 6th year as a cushion. The numbers still look okay. Or same thing, right? We don't actually hit our rent targets because something happens, but it's okay. If it's less than that, our cash flow is still looking okay. If, for example, our renovation plan, instead of 12 months, it's going to take us 18 months because something happens, right? Labor, raw material issues, who knows what. Are we still going to be okay in terms of being able to execute on our business plan and hitting our targets at the exit? All those different scenarios for the just in case. We kind of look at all those things. That to me is what conservative underwriting is building in that cushion.
So to sum it up, so when you do underwriting, you do your base underwriting baseline, right? This is what you know that should be. Like your renovation should be in 12 months, let's say 5 units per month, for example, hypothetically. And your rent should be this much baseline 1,500 and your cap rate should be this, but you're like, okay, let's stress test, let's, instead of 12 months, let's put it 18 months for the renovation. Now rentals, let's drop 5-10% down, let's see if we can sustain that, and cap rate, let's drop quarter point down, and let's see what kind of exit valuation will be there. Can we still hit our numbers, projected desired numbers for investors with those numbers? And if you don't hit those numbers, do you not send any LOIs? And do you send LOI based on that number, on your stress tested number? How do you use that number? Do you just walk from the deal if it doesn't work, or you just try to reduce the offer price?
Yeah, I mean, at the end of the day, if we believe in the deal and the neighborhood and all this kind of stuff, right? I'll still submit an offer because, and then I justify it to the broker that, hey, I'm not just lowballing you just to lowball you. Here are the reasons why, how we came up with these assumptions, and I'll clearly explain it. Because at the end of the day, right, if you don't submit an offer, you're just kind of self-eliminating yourself. And at the end of the day, you don't know what the other groups are going to come in at for sure. Brokers kind of like bluff a lot of the times and say like, oh, the other group is coming in, $3 million more and all this stuff. I'm like, really? But you know what? I've won deals where I was third place. The broker's saying all this because they're trying to kind of almost create like a bidding war, almost trying to push up the price. But at the end of the day, I stick to my guns. We believe in this deal. We've checked the area and everything. We believe that these rents are achievable. We've consulted with a property management company to make sure that our thought process is executable, all that stuff, right? And we stand firm and we'll submit an offer. And then at the end of the day, it's not closed till it's closed. Like I have this famous story that I tell people, why would you just quit? Why would you just not even try? So I have this famous story of a deal. It was in Georgia, okay? And this is maybe like a couple of years ago now, but the broker told me, it's 100 and so many units. Hitomi, this is the perfect kind of deal for you. It's very clean, very little deferred maintenance, right? I think you should take a stab at it. The problem was he gave it to me on a Monday and I had to submit an offer by the Friday. So I jammed through it really quickly. And because I'd already underwritten many deals in that market, we had a management company in place and my equity partner sponsor was also familiar. So I put everybody on alert, like, hey, I got to hurry up and do this. I'm going to need your help for a second pair of eyes to just bless it. Okay. Cut a long story short, the asking price is 27 million. I'm coming in at 21 million. So that's like $6 million difference, right? I triple checked it. I'm like, there's just no way this thing is worth 27 million. So I went back to the broker and I explained, I'm like, look, I'm very off from your thing, but I know that we can close this deal. We believe in this deal. And the broker was like, I know your group, go ahead and submit. Okay. So I did. I still submitted, even though I'm quite a bit lower. And the broker even admitted, yeah, the seller's being a little bit aggressive in their expectations, but go ahead and submit. So I did that. Well, never made it to the next round, so on and so forth. And I get a call from the broker. I think it was like 37 days later that the group that won fell out of contract. So it fell out of contract at 26 million. I'm like, I told you, it's overpriced. So they went to then round number 2. Okay. Broker says, what do you want to do? I'm like, I'm not going higher. 21. I'm sticking with 21. He's like, okay, fair enough. So we submitted again. Okay. I think another 30, almost 40 days go by and I find out that it also fell out of contract again at 25. See, I'm like, so twice now it's falling out of contract and it's getting lower and lower. So now it's going to the third round. Okay. What do you want to do? But by this point, I'm now under contract on another deal, a very, very large deal. My equity partner found out that I'm still submitting offers over there. So they were like, stop being greedy and stop submitting multiple offers. You need to focus on this one. How are you going to get this other thing closed if you were to win that one too? So at that point, I respectfully withdrew because I needed to commit to the other one that we now do have under contract, right? And this other deal's dragging out too long. So I respectfully withdrew. But I said, but I'd like to keep in touch and see what's happening. So best of luck. Short, a couple of months ago, that broker called me and was like, hey, how did it go with your other deal? I'm like, great, we closed. He's like, wow, congratulations. I'm like, what about you? And he's like, yeah, that's why I'm calling you. We just finally closed 2 weeks ago. I'm like, what? That was 18 months ago. He's like, I know, it took forever. Guess what it finally traded for? Remember, it started at 27.
Yep.
It fell out at 26.
26,
It fell out at
25, and back to 21.
I was at 21. Guess what it finally traded for?
21?
19.5.
No. Wow.
So that's the moral of the story, right? You don't know, it's not over until it's over. So I tell people, submit on what you believe the property is worth and the business plan makes sense for you, because you don't know what the other groups and what's going to happen and stuff like that. But if you give up and you don't even try, you've sort of self-eliminated yourself.
This is a good story. So to date, how many multifamily apartment complexes do you own and operate to date?
So we have a property in Texas. We have 12 different properties in Nevada made up. It's a portfolio of different things. We just closed on another property in Tucson, Arizona, and I'm under contract now for a very, very small property in California. So super excited about that.
Okay, so let's go back to underwriting. What are your thoughts on underwriting in today's market? Has your criteria shifted over the past year or two, or it just the same, doesn't matter?
No, I mean, this year in particular, with like the presidency and tariffs and all this kind of stuff, we're being very cautious on like any kind of properties that involve a lot of renovations because we're not sure where things are going to go for labor costs and what the supply chain might be like for raw materials. That could lead to a lot of risk. So we're being very cautious on that kind of stuff because it's out of our control, right? It's not something that you can really predict. Do you build in a cushion 10%? Do you build in a cushion of 50%? Like nobody really knows, right? Like the cost of stuff like that. So we're being very careful about that. And then the most exciting thing is last week, right? The bonus depreciation and all that stuff as it pertains to the big, beautiful bill that just passed, right? So that's huge. That's huge. So it's a moving target is what I'm trying to say, right? Like what's happening. We also don't really know where interest rates are going to go as a result of all of these new developments and things. So you cannot ever underwrite the same as the past. You always have to underwrite what's happening now and anticipate risk going into the future and adjust accordingly.
How do you stress test cap rate on the exit? Do you keep it the same as today, or you just lower it?
I mean, again, it kind of depends on how you bought it in the first place, right? Like if you got it at an extremely good cost basis, you might be going in with an unusually higher than normal cap rate because you got it at such a good price, right? But what you have to remember is that the property, every year that you have it is getting that much older every year. So we always try to be conservative and have our cap rate be slightly higher down the road than what we went in for, right? But a lot of that also goes back to your market knowledge of the area. So, for example, on our latest acquisition in Tucson, Arizona, the key principal, the captain, the leader of this particular deal, he's got a huge track record, 9th deal in Arizona, and in particular, 7th deal in Tucson. So he knows the market very, very well. And because of his relationship with brokers, we were able to get the property off market and on a really good cost basis. So therefore, we were able to kind of take a look at the comp sales, like what we paid for it versus all the other similar properties nearby, what they were trading for, and that kind of helped us determine what we thought would be a safe exit cap rate, reversion cap rate.
Got it. Okay, it's very interesting. Yeah, because the going in cap rate is not really that important because if you do value add specifically, you assume there's going to be a big difference in the cap rate on the exit, and the property usually traded in a different cap rate, especially if you do a value add.
Yeah.
So the
But
exit
the exit cap rate though is it's a really dangerous metric because you could unintentionally make a really mediocre deal look good, or you can unintentionally kill your deal because your cap rate is too high or something like that, you know? So the cap rate is a very, very dangerous metric that could, you know what I'm saying?
Yeah. Yeah,
Maneuver how
it depends how much you want this deal, and don't get emotional with this, and go back to your rule number one, just really be focused on numbers, and I think that's important. So with you being so active in real estate, multifamily, underwriting deals, and sending offers, LOIs to brokers, how much is the difference delta you see between the asking and the offer? I mean, that the other deals that you mentioned, Georgia, was like 25% delta is out of ordinary usually. Is it not? What do you see nowadays?
I mean, again, it's deal by deal. There's really no general thing because sometimes what I've seen is it's a distressed seller. They overpaid when they bought it, say 2 years ago, and they ran out of money. They didn't execute to their business plan appropriately. So out of desperation, they're asking for a crazy high price because they're hoping that the next group is going to come along and bail them out. So in situations like that, sometimes when I underwrite the deal, to me, the price should be what the loan amount equals to right now because their NOI and everything is just too low. But the fact that a group overpaid cannot be our problem, right? We have to be able to offer and buy it at what makes sense based on the income that the property is currently generating. So I've seen situations like that, right, where the property's in distress or the operators are in distress and there's a huge disconnect because unfortunately for them, they overpaid. So every circumstances is very different, right? Other times, you know, there was a deal that I looked at where the operator just wanted out. They're more of a developer, not really an operator. So they're having a lot of headaches just trying to like keep it leased, keep it full and so on and so forth. So in that situation, they were like, you know what? I just want to break even. Just give me my money. This is what I want. Can you quickly close and just get me out of this? I'm going to then take that money and do what I do really, really well, which is development. So sometimes we get lucky like that and we can negotiate with a seller that just, right, whatever their motivation is, whatever their reasoning is, we can come to an agreement.
So about this particular deal, did you talk directly to seller or you communicated through a broker?
Through the broker.
Okay, so you got all the details through the broker and he communicated the intention of the seller and you were able to draft a mutual win-win deal for everyone. Very good. Yeah, I mean, it's definitely. So in the end of the day, just taking an action, get your numbers straight and send the LOI. It's just the main and the most important step. Get out there and start submitting LOIs. And when you see the big difference in numbers, you usually try to call broker to say, hey, listen, I'm really low on this number. I'm not sure why is it asking us so much. So I don't want to offend anyone, but do you think, should I submit still offer or you did just send offer LOI anyways?
No, I mean, communication is critical with the broker. At the end of the day, I'm very blessed. I actually have a couple of brokers that have become mentors of mine. I know that kind of sounds strange, like how is a broker a mentor? But at the end of the day, right, I've developed relationships with brokers because that's what's key. It's relationships, right? Where they've guided me. They saw that I'm committed, I have the work ethic, and they want to help me because they want to transact, right? They want to transact at the end of the day, but they don't want to just transact with anybody. They want to transact with people that are easy to work with, that are responsive, that it's going to be a pleasure to actually transact. Because otherwise, it could be very challenging for them to get it over the finish line with a very difficult group. So even if, you're new, I always encourage people, right? Be easy to work with, be responsive like that. I think the broker is going to pay more attention to you. But at the end of the day, what I've learned over the years is the broker and the seller, it's not necessarily highest price that they're looking for. They're looking for a surety of close. They're looking for the strength of your team. And are you and your team going to be able to get this thing over the finish line? Because it's no joke getting the deal over the finish line. There's a lot of moving parts and all this sort of stuff. So from that perspective, that's what the broker's looking for. So I think it's going to be hard to be selected if you never even communicate with a broker during the discussion phase and analyzing phase. If you just kind of disappear and then suddenly just throw in an offer, the broker's like, who are you guys? Are you going to be able to close, So in my case, I'm constantly communicating with the broker throughout the whole process. Hey, I want a tour. Hey, I have some questions about this. Hey, I let them know that I'm taking it very seriously and I really respect the seller. And I ask also too, what is the seller's motivation? What is it about them that maybe in my offer, I can pitch it so that it alleviates a lot of the seller's stress. How could we meet and help the seller in this situation so the transaction is beneficial for the seller, stuff like that. So I'm communicating all along with the broker, so by the time it comes for submitting an offer, there's no surprises. He already knows or she already knows what my intentions are, where I'm at, what my thinking is, and they also I've demonstrated to them the strength of my team. So they know that by the time my offer comes, I'm coming with an offer with a team ready to go, ready to take this thing down. So I think that's what's really critical, that you don't just throw in some offer with zero communication. You want them to feel that you can perform it, that they have confidence in you. That way a broker could then advocate for you, right? And push you in front of the seller saying, you need to pick, Alex, because him and his team, right, they've been really easy to work with, right? They have a track record. You need to choose these people. So that's why I'm saying, right, where I've won deals where I was not the highest, I was third. And a lot of that was because the highest group, they felt they didn't really know who they were. They didn't believe in their track record. They didn't feel a surety of close. And the second group, I was told the seller just did not like them. They were rude, apparently, difficult to work with. Something like that the seller was like, man, just give it to that young girl. I can tell that she's not as experienced, but look at her team. She's got a very strong team behind her and they'll take this thing down. And she's been very pleasant to work with, very responsive. Just give it to her. Let's just get this thing done. So we won. And again, it wasn't because of the highest price. It was because I maintained that communication with the broker. We scheduled a tour, all those things. And it was the strength of my equity partner sponsor that helped seal the deal.
Wow, I think it's very powerful. Networking, communication, building those relationships, and keeping up with the conversation. I think it's important to answer the phone call, to respond to the emails in time, and to be upfront with your intentions, right? We're all here to make money. There's no question about it. It's just how you go about this process that actually make a big difference.
One of the big things I've learned over the years that I've gotten feedback from brokers: never, ever, ever ghost a broker. Never. So does that mean that every single deal I look at, I always submit an offer? Absolutely not. There are some deals, once I kind of get into it, I'm like, ooh, you know what? This is actually, no, we're not gonna move forward. I always let them know, hey, I'm gonna respectfully withdraw. Here are the reasons why. What you never want to do is ghost the broker, because then you'll never get a call back.
Wow, that's true. And if you don't get called back, then you're never gonna get the deal. And if they have any pocket deals or new deals coming through, they're just not gonna call you back too. And this is broken your lead flow, and it's hard to repair it. Okay, let's switch gears and talk about your mentorship program and Underwrite to Win. I know you co-founded it, but what inspired you to launch this?
For me, when I first got started, before I found a mentor and stuff like that, there was just a lot of suffering involved, right? It's very overwhelming when you're first starting, right? Irregardless of what industry you come from, what work experience you have, it's just different, right? There's a whole bunch of, like, a lot of moving parts and everything. And I struggled with being effective with my time. I struggled with fear about, am I making a mistake? You know, all those kinds of things. And it was just really difficult to just balance trying to learn how to do all this with a full-time job. Okay. So once through trial and error and suffering, I figured out how to very quickly and effectively start screening deals and then actually coming up with a business plan, right? Through the help of guidance with mentors and stuff like that. All of a sudden, more and more people started approaching me. Hey, can you help me? Can you look at my deal? You know, I'm struggling and stuff like that. And I would start to see patterns over and over and over of the same areas that people were getting stuck on, you know, the same things. And that's when I realized, like, wow, I'm helping so many of these people, but it's also killing me. I'm doing it Sunday afternoons, Thursday nights, Tuesday mornings. And I started running out of time to, like, do my own deals because I'm getting sucked in trying to help these people, like, on a one-on-one basis, you know. That's when I partnered up with my business partner, Hans Seelinger, because he also got really good at underwriting and people started approaching him. And so we put our heads together. We're like, man, we can launch something together where I think we can help a lot more people. And we both actually also realized through this journey how much we actually enjoy helping people. That's been such a rewarding experience from all of this because we've seen the gift that real estate brings to actually, we want to share this opportunity with more people to get them into it. And so that was the motivation for us on why we launched this thing. We can help more people effectively, and we really, really enjoy it. We felt that there was a niche market.
Yeah, I totally agree. I mean, there always someone needs help. You at some point of your career, you needed help, mentorship, someone who can get you under the wing and show you the ropes. And that's what you just given back to the community. And I really appreciate what you're doing. Love it. So what would you be the biggest advice for someone just getting started and feeling overwhelmed by the numbers?
The biggest advice is getting a mentor or a coach, right? Because that's what's going to help save time. But why do athletes hire coaches? It's about being effective and saving time and being able to hit your goals effectively. Because if you already know how to do it, you wouldn't be so overwhelmed. And the purpose of hiring a coach or a mentor is to be able to, like, kind of fine tune what you're already good at, but then point out areas of weakness. And I think for my instance, right, like, I've never had a problem with work ethics. I didn't need a coach to, like, you know, help me get up out of bed every morning or anything like that. But it was what I was spending my time on, you know. I thought I was working really, really hard, you know, staying up until 2 o'clock in the morning or getting up at 4 in the morning and trying to underwrite and stuff like that, right? But all of that didn't make any sense or didn't matter if it's the wrong stuff, you know? And so when you're new, I think a lot of people get distracted by thinking that, oh, I'm being really effective. I've made all these phone calls and I've talked to so-and-so, right? But really what you're doing is you're just busy kind of shuffling papers around on your desk. So you're busy being busy, but not necessarily effective and stuff. And so I feel like by hiring a mentor or a coach, it's going to help you get really structured and focused on what you should be doing and in what order. so that it helps you really take a look at, what you're spending your time on, what you shouldn't be worrying about, and then also getting out of analysis paralysis. Because if you think about it in the real world, right, when you find a deal, you have a very short window of time that you need to be able to make a decision. Does this deal make sense, right, for us to pursue or not, to get that offer in? And to get that offer in, it involving lots of other people that you're going to need for their assistance, right? The lender, insurance, sponsor, property management company, maybe even touring and all that stuff. So there's a lot of things that you got to be able to tackle to be able to make a decision quickly. And when you're new, right, I see new people taking 2 months to underwrite one deal. You're never going to get anywhere if you move that slow. And the problem is, I think when you're new, you're so overwhelmed, you don't know what to start first. And that's where a mentorship and a coach could really help with that. But also then give you confidence on understanding the numbers, because it always, at the end of the day, boils down to the numbers, because we're buying a business. Even if, say, you want to do investor relations and capital raising, which is kind of separate from underwriting, you still have a fiduciary responsibility to your investors. So you cannot ever completely escape underwriting or understanding the business plan, because you're now getting investors involved. You better understand that business plan and have faith in it and believe in it if you're going to participate with the capital raising part of it too, because we're all on the same ship together. Ship capsizes and sinks, we're all in trouble. And the common denominator, driving force of all of that is the underwriting and the business plan.
I think it's the most important step there. And you can't just tell to your investor, hey, I didn't know this is underwritten incorrectly. I didn't know it was such a wrong assumptions, because at the end of the day, why you didn't know? I mean, aren't you in multifamily? Aren't you trying to do this business? So it's crucial for people to understand it. Okay. Hitomi, I have last few questions for you. Quick hits, lightning round. So whatever first comes to your mind, just let us know. One book or resource that made a big impact on your underwriting or investing mindset.
So there's actually two, and they're not actually technical underwriting books, but it's mindset and growth. One, I love this book, The Atomic Habits by James Clear, because it's about how we spend our time and being efficient. So love that book. And another favorite of mine is by Simon Sinek, Start with Why. Start with why. Because for a lot of us, this journey of entrepreneurship, it's hard. And there are times that you want to quit and this and that, whatever, right? That book helps get you centered again about why you're doing what you're doing. And same thing with running the business. What is it you're trying to do? What is the why of this particular apartment project that you want to take on? It all centers around that key question. So love those two books.
Yeah, I read Atomic Habits actually a couple of times because it wasn't enough one time. Sometimes I like to read it, the most impactful ones. Okay, so next question. The most important trait a new real estate investor should build?
Relationships. You cannot do this alone. You want to build relationships, but come with a mindset of not, oh, how could this person help me? Turn it around. How could you add value? What do you need to learn, develop, skill, whatever, so you could be of value to help somebody else? That's super important.
Your network is your net worth. This is every day I'm more in this business and I'm trying to do real estate. It shapes into new vision, new reality, but it becomes bigger importance there. So one thing you wish you knew earlier in your real estate journey?
I would say, and for real estate journey, I would say capital raising, investor relationships is no joke. It's really, really hard. It's really, really hard. So start the relationships early, and I think don't be afraid to ask for help. I think that was my problem at the very, very beginning, was thinking I had to know everything before getting started. What I've learned, though, is by surrounding yourself with other smart people, you can leverage them. You don't have to learn everything so you can get started. And I think people get into that trap that they never get started because they're overwhelmed with thinking that you have to know everything.
Wow. I think it's the most important. Okay, Hitomi, I have one last question for you. If someone want to reach out and talk about real estate or underwriting, how can people reach out to you?
Sure. They can just send an email to info@UW2win. So underwriting to win, W-I-N. So UW2win.com.
Love it. Okay, so that's it. And we will leave you information about your company and about the website and everything that you provided right in the description. If someone wants to get to know you better and what you do, that will be the great way to start. Love it. Thank you so much, Hitomi. Thank you for coming in today. I'm done with my questions finally. I'm sorry, it's been a lot, but thank you for sharing your journey and your wisdom. It was impactful for me personally, and I'm sure for all of our listeners as well.
Thank you.
Thank you. And for everyone who's listening, don't forget to like and subscribe. And as always, keep moving forward.